Welcome to Markets Now. I'm Michelle Rook with Jeff Hogendorn with Professional Ag Marketing. Well, we are seeing some mixed trade in the grains, corn and beans higher. The wheat market has been lower. And then we saw a little initial kind of two-sided trade over in the cattle, but we're mixed in live cattle down in the feeders, and we're back up in the hogs. Jeff, let's start off with the cattle. Live cattle futures have been trying to consolidate after the big washout here, but, we've kind of gotten up into some chart resistance areas again, haven't we?
Yeah, especially on the front month here, we're trying to get past, that gap that we left right after the cattle and feed report, basically a little over a week ago. Haven't been able to fill that yet. I don't know if that's too disappointing. I think it's definitely worth paying attention to as you go forward here. But yeah, I mean, fairly impressive fundamentals on the cattle side, Michelle. I know that's mostly, I haven't seen anything on cash this week, so that's mostly last week's information, but it's a little bit of a struggle why we can't get these futures to a little bit more excited than what they are. Somewhat concerning, I guess.
Yeah, and the cash trade, did improve as we went through the week, especially impressive after the washout on the futures. And so cash is going to be kind of key this week in terms of keeping the rally or the recovery anyways going, isn't it, Jeff?
Yeah, I think so, and I just look at it. What's so impressive about it is you back up 2 weeks. And I know it's getting a little bit big picture, but the market was really screaming at us to make cattle bigger, keep them on feed another 2 weeks, 30 days, or whatever. The futures had a carry to them. The corn had broke, right. That completely flip flopped here to a positive basis now. So we should have had all the sellers that wanted to sell or was getting close to selling anything should have been selling last week, and maybe it was just a function of we've started a trend here, and we'll be able to work that cash market lower again this week. But man, we've really flip-flopped the motivation. Should be trying to get this industry a little bit current on the cash side, and that's what I think is encouraging about it is if we get a little bit more current, I've got a lot higher expectations for this market as we get down the road here, 30, 60, and 90 days, Michelle, because in my mind, the way that we were going to squash this thing a bit was making cattle too big, keeping them around a little too long, and losing the leverage. And honestly, I know it sounds weird, but this break in the futures should be helping us stay a little bit more current, helping us stay a little bit more healthy long term. I think the other thing I wanted to quick point out was, there hasn't been any issues showing up in the box beef values. That's going to be certainly worth watching. From a seasonal perspective, we need to be working that just a little bit higher, but that's what we're doing. Everything seems to be in pretty good shape. It just the futures obviously took a pretty big break here, and they're struggling to get themselves back on track in my mind.
Yeah, and we're struggling a little bit today, but we're going into an FOMC meeting announcement tomorrow, even though we expect interest rates to stay steady. Obviously there's always concern going in there. And then it's end of the month today too. Doesn't that play into it?
Yeah, that's a fair point, and we've definitely liquidated a good chunk of the cattle position on that break and put some of it back on here in the past few days. I
Yeah.
I suspect so. It's probably pretty easy to be taking some profits. You think about the Fed meeting here tomorrow. Yesterday we looked at that and thought that was a pretty positive influence into the marketplace. The idea that expectations were fairly optimistic. We would keep rates the same. That helped us out yesterday. Everything was higher and easily so. So it makes sense that we're going to pull that back a little bit for the reasons that you've mentioned here, Michelle. I would agree with that.
Yeah, a little end of the month profit taking lightly. Okay,
Yep.
hogs. We are up right now as you and I speak for the fifth straight day. The funds have gotten out of most of their longs. They've gone short this market, but we've had this recovery now, Jeff, and we're kind of getting up into some resistance on the charts there too, aren't we?
Yeah, I think it's going to make quite a bit of sense for this market to take a bit of a break here. It was really impressive here too as to how oversold that market had become here. Was that roughly a week ago or so when we put those lows in? I mean, similar to the cattle, you had a huge discount to to where the current fundamentals, CME index, cash, and cutout were all kind of congregated. And we've fixed a lot of that in the last, like you said, 4 days going on 5 days here. So right now, as where December sits, is a very normal relationship to where the CME index is at. And I think that's kind of where this market's at. I think it's very much just normal right now. We've got fundamentals slipping a little bit. Cutout's been a little weaker. Yesterday was higher, lower load counts. I think today is going to be the more telltale, trend is where they want the product values to go. I'm afraid that um, message is going to be a little bit lower per our seasonal here. So you look at where December's at, and you say, okay, it kind of makes sense right here. And like you say, we about 50% retracement compared to where we started this break. Probably a lot of good reasons for it to settle in here
Yeah,
and get pretty comfortable in my mind.
absolutely. Soybean market, we're up to date, but this has been kind of meal has been I guess, the driver of the market here. And we're just off of new contract highs that were scored on Friday. So, can we keep that market going if meal leads us or not?
I think you can. I've been very disappointed, I think, along with everybody else, as to how little the beans have followed the meal up. I
Yeah,
mean, that's
no
still
doubt.
been an absolutely impressive market, right? But um, I think it's going to struggle on the meal side personally. So I'm not super optimistic that can drag us higher all by itself. So it's almost like we're going to have to get somebody, playing the crush here a little bit, saying, hey, beans look a little bit cheap compared to where this meal is at. So if we keep the meal where it's at today instead of breaking it, which I think that seems to be a real possibility, I think you'll get some buying on the soybean side. We might need just a
Mm.
smidget of good news outside of the meal market, Michelle, but it seems like we're building a pretty strong support here. I'm staring at the January chart here at $13. We hit that again this morning and didn't have any issue bouncing off it. So it probably takes a little something else, but then we can catch up with the meal market just a tad and probably put some decent money on these beans if we can get that accomplished.
We did get some Mexico business this morning on the export front, and we are watching South American weather here, even though it's a little early, right?
Yep, it is a little early, but the Argentina story is definitely one worth paying attention to. There's no doubt they've got some dryness issues down there, and then yeah, we need some export sales. That'll helps be a little bit of a catalyst to push these futures a little bit higher. I think with our harvest growing to a close here, 85% complete at the beginning of this week and making some progress this week, we're going to really switch over and start thinking more and more about South America, even though it is a little bit early. Probably gives us some reason to build some premium into this market, though, with futures being futures markets, Michelle.
And what about this corn market? Is it just following soybeans and meal or crude oil, or what's going on there today? And how can we get broke out of these trading ranges, or will we be able to?
Well, I'm sure we will, to one direction or the other, right? And that's definitely how that market's been shaping up here. I think it's paying attention to all the above, the soybeans, the crude oil, and those seem to, rarely do you get a day where everything lines up one direction or the other, and corn has some clear direction, right? And I think that's corn's issue. It really doesn't have any fundamentals to push it around, any new information on its own. So it's looking out for some outside influence, and that all seems to conflict each other in most days. And what you get left with is what, 5 or 6 cent trading range almost every single day. And it's really getting to be impressive how sharply sideways that market's become here.
Okay, what's it take to break us out of that range, though, Jeff? What do
So
you
like,
think?
you're going to need some sort of catalyst, whether that's beans finally deciding, okay, let's push higher. Oil saying, let's get back down to into the 70s. Some catalyst, maybe it's some purchase of, export purchases on its own. I don't really foresee any of that taking place. Maybe the soybean one could give it some support and start a trend again, but that's going to be tough when you go back here 4 or 5 trading days and we we really crushed that rally that we had going on. So that's going to
Yeah.
be very difficult. You're going to look at the November WASD report, but that's still a couple of weeks out. It's going to be really hard to break it. If I had to guess, I would say we could stick right here until you get to the WASD report, see if that's got any excitement in it, and then go from there. But kind of looking for something to spark it out there.
Yeah, because South American weather to trade that in earnest, you got to have a big problem, and it's too soon for that. Those big rallies don't come for a while, do they?
That's absolutely my opinion, especially like the corn's going to be one step removed from the beans, right?
Yeah.
So it takes that much more to get anything exciting going on in that front. I would say I feel like the seasonals are going to be a little bit weaker as you go into November, but the lows are only 10 cents below us here, Michelle. So I think you're really going to struggle to go back and take those out.
All right. Thanks for joining us. Jeff Hogendorn with Professional Ag Marketing. That is Markets Now.